Now with Shein reportedly eyeing an IPO in 2024, that would make it one of the largest U.S. listings ever. Amazon might be feeling the pressure. The e-commerce giant is slashing its fees for merchants who sell clothing for under $20. We have our very own Brooke DePalma with us. Brooke, so I looked at this blog post where they talked about what's coming down the pike. What are the changes that stood out to you that Amazon's making?
Yeah, well, in that blog post, no mention of Shein, no mention of Temu. They are straying away from the competition, saying that they're singularly focused on their own business here. They announced that they're going to reduce seller fees on clothing products priced below $15 to 5%. Now, for fees on clothing products priced from $15 to $20, that seller's fee will drop to 10%. Now, commissions on both these categories previously had been 17%. For clothing that's higher priced, that will remain unchanged. So any clothing above $20, that will remain unchanged. Now, these changes will go into effect January 15th, 2024, so it won't happen until next year. But of course, all eyes on that potential Shein IPO. They did reportedly file confidentially to go public here in the U.S. And of course, they do face ongoing competition. We are seeing other competitors like Temu, like TikTok Shop really come into the foreplay, especially engaging Gen Z, which all retail has a close watch on now. And of course, Amazon has really captivated the U.S. e-commerce market. Now, potential competition from Shein, perhaps scaring them, spooking them a bit.
Yeah, certainly. You think about what we've heard recently with regard to the potential for Shein to become a public company here in the U.S. I mean, it is a little bit of an uphill battle when you think about the regulatory climate for Shein.
Absolutely.
Regulators have a problem with Shein's labor practices, particularly when it comes to their relationship with China. And Shein itself has been distancing itself from China. So Amazon also trying to get in front of that public debut and make it more attractive, certainly for merchants on its platform. And to your point, there weren't any other changes that to me were beneficial, but this is a big one, especially when you think about the cost that merchants have to pay, the fees that merchants have to pay, and Amazon trying to hold on to more of the pie when it comes to these cheaper products. And then, we haven't even talked about as much about Temu, which has taken some of Shein's market share.
And these low price items is really what is tapping into consumers' wants nowadays. Everyone's looking for value. Everybody wants to get the best bang for their buck, and they are willing to compromise for a cheaper, perhaps lower quality item in order to get what they want in a pinch. And Amazon right now, they did mention in that blog post that they remain an average of 70% less expensive than 2-day shipping methods offered by other third-party logistic providers. Of course, we're seeing others get into this marketplace space. We saw Walmart really step up their e-commerce game in recent years. Target doing the same, perhaps inviting third-party sellers as well. And so this is really an ongoing game here that so many retailers are really trying to tap into. Online e-commerce isn't going anywhere, and consumers looking for value isn't going anywhere anytime soon.
Yeah, and sure, inflation has come down. We've talked about this numerous times, Brad.
We have to.
Yes.
I mean, we also got to talk about the fact that Amazon has sunsetted about 27 out of 30 of their in-house brands. And at a time where consumers are looking for any type of trade down away from some of the more expensive fashion out there, fast fashion has stood in the gap because it's easy for a lot of these companies to just pump out or have specific collaborations that they're able to then kind of hype up and then bring customers into the fray on some of the other items, the essential items that they can sell for the low. But at the end of the day, for Amazon, even as they had kind of rolled back some of those brands like Larkin Rowe and bevy of other dozens of names that they had produced over the years, this year really rolling that back. It goes to show at a time right now where consumers are looking for that trade down option that they need to engage with some of those other fast fashion players that are able to sell in as third-party merchants on their site too.
Yeah, and many of these companies are not going to say that they're fast fashion. They're
but
they really are trying to get ahead of the trends. They're saying that they're producing a lower amount of inventory, especially a year ago when that was such an issue, and that they're pushing out, really engaging customers with what they want. But of course, we do see an inventory woe continue to be an issue within the industry at large, but really capitalizing on that search engine optimization, looking for what retailers want, perhaps that puffy vest that's trending right now.
That's what's trending?
The puffy short vest. Have you not seen this?
Yeah.
That is very much so back.
So much stuff is back. I mean, we're not surprised when it comes to fashion, especially with fast fashion, that they'll bring something, back, and let's see who can dominate there.
Who can capitalize on it as well.
Exactly, whether it's Shein, Amazon, or Temu. We'll see, Brooke.